Welcome to the deep dive. In this economic climate, uncertainty feels almost normal, doesn't it? And market volatility, well, it can seem like a constant roller coaster. So, a really big question comes up for all of us. When things feel shaky, what assets actually offer reliable protection? Today, we're going deep on that, looking at the enduring value of gold, especially when markets get turbulent. We're pulling insights from a really interesting piece in the Gold IRA Company's Bulletin by Doug Young, dated July 12th, 2025. Our goal here is to kind of unpack why gold, this ancient metal, still seems to matter so much in our, modern financial world. Does it really hold up as a safe haven when push comes to shove? But first, super important, a disclaimer straight from the source material. This article is for informational purposes only and does not constitute financial investment or legal advice. Always consult a qualified professional before making any financial decisions. Okay, got that. All right, so let's unpack this. Before we zero in on gold itself, what is a safe haven asset really? Like what makes something safe when markets are going wild?
Yeah, that's the perfect place to start. Fundamentally, a safe haven asset is an investment you expect to hold its value, or maybe even go up, when the economy hits a rough patch or the markets are under stress. Something people often miss is their correlation. They tend to have a low, or sometimes even negative correlation with the broader market.
Meaning they don't just follow stocks down.
Exactly, or at least not as much. When your stocks are tanking, you ideally want something in your portfolio that's doing its own thing, or maybe even going the other way. Common examples our source mentions are things like government bonds, certain stable currencies, maybe some defensive stocks, and of course, precious metals, with gold being the classic example. The main appeal isn't usually about hitting home runs with growth. It's really about protecting your capital, diversifying, managing risk when your other investments are struggling. Preservation and stability, that's the game.
Okay, preservation. And with gold, this isn't a new idea at all. That's what's so fascinating. Its role as a store of value goes back, thousands of years? Ancient civilizations loved it for its rarity, its beauty, and then it literally became the bedrock of money systems, like the gold standard. What does the article say about how gold handled that huge shift?
Yeah.
When the gold standard ended and it became this free-floating thing?
Right, it was a massive transition. For centuries, gold was that tangible link, giving currency a sense of, real value. But even after the gold standard ended back in '71, gold didn't just disappear, it sort of morphed. It became this free-floating asset, but crucially, it kept its reputation as a hedge against inflation, against currencies losing value.
And history backs that up?
Oh, absolutely. The historical record is pretty compelling. Think about the Great Depression. Banks were failing, money was losing value, but gold held its ground. Or the 1970s. Remember all that inflation and geopolitical mess?
Yeah, stagflation.
Exactly. Gold prices went nuts, up over 2,000% during that decade. More recently, the 2008 crisis. Stocks cratered, but gold. It climbed about 20% as investors ran for cover. And even during the start of the COVID pandemic in 2020, there was some initial weirdness, some volatility. But pretty quickly, gold hit record highs because the economic uncertainty was just so intense.
Wow.
Yeah, these moments really show its historical resilience, its role as that financial refuge.
Those are strong examples, but what is it about gold? What are the actual, inherent qualities that let it play this role decade after decade, century after century?
Well, it boils down to a few key characteristics. First off, intrinsic value and scarcity. This is huge. Unlike the money in your bank account, governments can't just print more gold whenever they feel like it.
Right.
Its limited supply is a natural defense against devaluation, against inflation.
Yeah.
It's almost like an analog solution to a digital problem sometimes. Second, that low correlation we talked about.
Yeah.
It often zugs when stocks and bonds zag, which is great for diversification. Not always perfectly inverse, but often independent.
Okay.
Third, global liquidity. Gold is recognized and traded everywhere. You can generally sell it for cash pretty quickly anywhere in the world. That's critical in a crisis.
Yeah, you don't want to be stuck with something you can't sell.
Precisely. Then there's geopolitical neutrality. Gold isn't really tied to any single country's economy or political system. So it's somewhat insulated from, say, one nation's debt crisis or political turmoil that might hammer its currency or bonds.
That makes a lot of sense.
And finally, don't forget, it's durable and tangible. It's a physical thing. It doesn't rust or decay. And you can hold it, store it yourself, completely outside the traditional banking system if you want. That offers a different kind of security for some people.
Okay, that paints a pretty robust picture, but, nothing's perfect. Even safe havens can behave unexpectedly sometimes, right? The article mentions some nuances, like gold doesn't always just go straight up when markets panic. What's the reality there?
That's a really crucial point, and the source is right to highlight it. It's not always a simple story. Remember March 2020, right at the start of the pandemic when markets just completely seized up,
Yeah, everything fell.
everything fell, including gold initially. It dropped alongside stocks.
Why was that, if it's a safe haven?
Well, in those moments of extreme stress, when margin calls are flying and people need cash desperately, they sell whatever they can, even the good stuff. They needed liquidity, maybe to cover losses in stocks or other areas, so they sold gold too. It temporarily kind of broke that safe haven link.
Like, okay. The dash for cash.
Exactly. And some research suggests that while gold often acts as a safe haven, especially during really sharp market drops, that effect might sometimes only last for a short period, maybe just a couple of weeks. So it's probably better understood as a long-term store of value, a strategic diversifier,
Yeah.
rather than a foolproof hedge against every single short-term market dip. It's not magic. Patience is key.
That March 2020 point is really clarifying. It shows things aren't always black and white, which makes it even more interesting then that big players like central banks seem to be loading up on gold, doesn't it? What's driving that trend, and how does that tie into the whole inflation protection idea?
It absolutely connects. Yeah, central banks around the world have been buying quite a bit of gold in recent years. It's a significant trend. Why? Mostly to diversify their reserves. They hold huge amounts of foreign currency, especially U.S. dollars. Adding gold helps spread that risk, reduces reliance on any single currency, and acts as a shield against bigger systemic monetary risks.
So it's like institutional risk management.
Pretty much. Their buying kind of reinforces gold's status as this globally trusted sort of neutral reserve asset. It signals confidence in its long-term role, and that links directly to inflation. We all know inflation eats away at the value of our money, our purchasing power. Historically, over the long run, gold has tended to hold its value against inflation pretty well. Its price doesn't track inflation day by day, obviously, but during sustained periods of rising prices, gold's value often rises too. So it acts as a tool to help maintain real wealth, especially if you're worried about currencies being devalued by, say, massive money printing.
Okay, so we have gold's unique features, its history, the central bank angle. How does it actually compare feature for feature against other things people call safe havens, like government bonds or those defensive stocks you mentioned? Does the article lay out the key differences?
It does, and the comparison really highlights gold's unique mix.
Let's
Let's look at a few things. Inflation hedge. Gold tends to be strong long-term. Bonds, moderate at best, sometimes poor. Defensive stocks, usually low correlation with inflation itself. Liquidity. Gold is very high. Easy to sell almost anywhere. Government bonds, major ones at least, are also highly liquid. Defensive stocks are generally liquid, but maybe a step below, so moderate to high.
Right.
Correlation with stocks, gold's is low. Bonds are often inversely correlated, which is also useful. Defensive stocks, well, they're still stocks, so their correlation is higher, maybe moderate to high.
That's a key difference for diversification.
Huge difference. And then there's counterparty risk. This is critical. Physical gold, none. You hold the asset. Government bonds, you rely on the government not defaulting, so there's issuer risk. Defensive stocks, you rely on the company staying solvent, clear counterparty risk there.
Good point.
Finally, historical stability. Gold's track record is literally millennia long. Bonds and stocks as we know them. We're talking decades, maybe centuries for some bond concepts, but it's not the same deep history. So yeah, that combination, inflation hedge, liquidity, low correlation, no counterparty risk, deep history, pretty unique to gold.
That comparison really lays it out. So bringing this all together, what are the practical takeaways for you listening? How should we think about gold's role day to day?
I think the most important thing is perspective. You really need to see gold as a monetary asset first and foremost. Its primary job is capital preservation, risk reduction, generally not an investment you buy expecting it to generate income like dividends from stocks or interest from bonds. It doesn't usually do that.
Right, it just sits there.
It just sits there, exactly. And yes, its price can be volatile in the short term. It goes up, it goes down. Its real strength, its value proposition is its resilience over the long haul, particularly when things get uncertain. It helps preserve purchasing power. It's really about trying to separate the emotional market noise from the long-term historical function. Gold's enduring appeal isn't about chasing quick profits. It's about having an anchor in the portfolio, something reliable when other assets are facing headwinds.
An anchor. I like that. Okay, so wrapping up this deep dive, it seems gold's value in volatile times comes from this really potent mix of unique traits, deep historical roots, and its accepted role in the global financial system. It's a key tool for preserving wealth and managing risk, especially looking long term.
Absolutely. And maybe just to leave you with a final thought to chew on,
Hmm.
if you think about gold's whole journey from being actual currency thousands of years ago to now being a strategic reserve asset held by the world's most powerful central banks, it really underscores this unique blend of tangible value and global neutrality. So maybe the question for you to ponder is this. As the global financial system keeps changing, keeps evolving, how might the enduring qualities of an asset like gold, even with all its nuances, start to reshape how we even define stability and security in the future?
That's a deep question. Definitely something to think about. Thank you for guiding us through that complex world. And thank you for joining us on the deep dive. Keep exploring, keep questioning, and we'll catch you on the next one.